Hello, everybody. Welcome to week two. Um, Sorry about the slow start to last week. I guess this class got created a little bit after the uh, the mod started, so do want to apologize about that and the slow start that we got. I didn't get access to the class until Thursday morning, so made for a rough start. I wanted to make this video to give you guys kind of a heads up. I'm going to try to do one of these each week. Want to introduce week two to you guys is pretty much the purpose of this video. We're going to cover chapter 3 and chapter 4 this week. Here I am on the homework grid. You notice we're in week 2 here. Kind of lists it out. The college prepares this for you guys. Do want to let you know, or notice rather, the 20-hour requirement here. That's for your guys' benefit, just to kind of give you a idea of what you're going to need to do, how much time you're going to need to put towards the work that we need to do this week. College suggests 20 hours. I think that's probably about right. Some can do it in less. Some can do it going to need a little bit more time. Everything for week 2 is going to be due on June 7th at 11:55 p.m. Alaska Standard Time. Here I am. I'm in the ebook now in chapter 3. Just want to touch on a few of the items that I think are important for this week here in chapter 3 and chapter 4. On page 100 here, the concept of the accounting period I think is an important concept for everybody to grasp. Typically it is a year measurement. It doesn't mean that it's going to be the same as a calendar year. So year end may not be December 31st, just like the calendar year is. It could be another quarter end, perhaps March, June, or September. It's just something to think about going forward. Here on page 101 is another important concept. This one is actually something that we'll touch on in the discussion forum this week. It's the concept of the accrual basis of accounting versus cash basis. Um, this is just sort of very introductory, um, but you'll want to be familiar with both these bases of accounting. Going forward, accrual basis is what you'll want to learn, and that'll be the focus of our studies going forward. But we do want to introduce both of these at this point. Here on page 103, looking at the prepaid expenses. This is another big concept that you'll want to try to comprehend this week. Prepaid expenses are pretty much anything that you pay for before uh, the benefit is received. In my line of work, one thing I've come across a lot is prepaid insurance. It's when you buy a policy ahead of time, and that goes on as an asset, as a prepaid asset. And as the policy expires, you expense it off. So you'll want to be familiar with this concept. It's not only insurance; it can be prepaid rent, um, things of that nature. Page 104 is another big concept of depreciation. That's where we expense fixed plant assets over the life of their useful life. So instead of buying a asset such as a machine that you'll use and expensing it immediately, you depreciate it over the life of that asset. So if you buy a machine that's going to last 5 years, the idea is that you'll depreciate a portion of that asset each of the 5 years that it's useful. Um, so that's a big concept that I want you guys to be familiar with as well. Wrapping up chapter 3 here, there's three big concepts towards the end of the chapter. On 107, the concept of unearned revenues. It's a big concept as well. It sometimes can be called deferred revenues. It's a liability account. That would basically what this is when you receive payment for services that you are to complete for somebody, but you haven't done the service yet. It's revenue that would be realized as you do the service. Sort of the kind of the opposite of the prepaid accounts that we were talking about earlier. Here on page 109 is another big concept, accrued expenses. This is when you would have um, had a service provided to you, but you haven't made payment yet, and it goes on as a liability on the balance sheet once that service is rendered to you, and essentially is a payable to the vendor that's providing that service to you. And once you pay that off, it would be a debit to that liability account and a um, credit to cash, actually. The final big item here in chapter 3 is accrued revenues. That this is when you've provided a service to somebody yet, but you haven't been paid. Um, so basically, this is a revenue account that's actually an asset until you receive payment. So um, between prepaid expenses, depreciation, unearned revenues, accrued expenses, and then now accrued revenues, these are all characteristic of uh, accrual basis of accounting. So these are all concepts that you'll want to have in your mind as we go forward. Um, so all big points to really mull over as you read chapter 3. Okay, now I'm in chapter 4. Chapter 4 starts out with explanation and kind of a thumbnail sketch of accountant's work papers. You'll want to give this a pretty good read because it's going to segue into the closing process and ultimately the accounting cycle, which you'll want to give a good amount of time and concentration to as you read through chapter 4. A big concept towards the back of the end of chapter 4 is the classified balance sheet. Um, this is going to be actually one of the topics we hit on in the discussion forum this week. So give this a good amount of time. And actually, the part in the discussion forum that we're going to hit on is current versus non-current. So, and that's all here in a C3. And you want to give that some time. Basically, current assets are something that will be either used or paid off in the following 12 months, and non-current would be naturally anything that would go beyond 12 months as far as either being paid off or being used. So that's a big concept I want you guys to really look at as the week progresses, and again, definitely for the discussion forum as well. Moving on really quick, I'm going to touch on a couple of the assignments. Here I am, I'm on in assignment 1 here in the Connect system. It's going to mirror what we did for assignment 1 in week 1. There's going to be a general journal where you'll journalize these transactions 1 through 6, and they look like they're all based on the accrual counting concepts that we touch on in chapter 3, followed by a general ledger, which will be the transfer of those journal entries into the trial balance or the general ledger, and you'll transfer those items from the ledger to the trial balance, and then you'll create the income statement, owner's equity statement, and the balance sheet for this assignment. And I plan on having something for you guys to lean on as you complete this um, to help ease you through it. Finally, assignment 2 is more of the essay format that we saw in assignment 2 for week 1 as well. Do your best on this. I typically grade pretty liberally on these assignments, so please please make an effort and get the submission in, and I'll do my best to accommodate everybody on this. I'm going to wrap this up right now. If anybody has any questions, issues as the week goes on, feel free to email me. I'm always available. Try to respond to email questions within 24 hours, typically less. So, everybody have a good week, and we'll all be in touch. Thanks.